Hey everyone, welcome back to Corporate Decoder. Today we're diving into AirNet Technology's annual report, and let me tell you, this one's a roller coaster. Think high-flying ambitions meet a bit of turbulence, if you catch my drift. This filing paints a picture of a company at a crossroads trying to reinvent itself from in-flight entertainment to cryptocurrency? Yeah, you heard that right. We'll see how these daring moves are impacting the company's bottom line and whether they're paying off. Before we get started, if you enjoy having clarity in the confusing world of business, make sure you're subscribed. We also have a Discord community linked in the description below, so join to get even more involved. First things first, this is an annual report, so it covers the financial year that ended December 31, 2024. This is a Form 20F, which is what foreign companies use to file their annual reports with the SEC. They are not a well-known seasoned issuer or shell company. As of the end of 2024, they had a bit over 14 million ordinary shares outstanding. These shares are traded on the Nasdaq Capital Market under the ticker symbol ANT in the form of American Depository Shares or ADSs. Now, before we dive into the numbers, it's worth noting the usual forward-looking statements disclaimer. Basically, everything AirNet says about the future is just an educated guess, and reality might turn out very different. AirNet Technology Inc. operates as a holding company with its hands in both its subsidiaries and certain variable interest entities or VIEs. There's a constant flow of cash among all of these different entities. AirNet and its related entities face legal and operational risks from operating in China. There's always a risk that the Chinese government might step in and influence their operations or even how foreign investments are made. A looming risk is that the PCAOB, the group that inspects accounting firms, might not be able to fully check AirNet's auditors. If that happens for 2 years straight, AirNet could get kicked off US stock exchanges. Let's get to the numbers. Their net revenues for the year were only $343,000. However, their cost of revenues nearly matched it at $306,000. That means they barely made any profit at all, just $37,000. Operating expenses were a whopping $6.8 million. All this means is that the company lost quite a bit of money from operations. Specifically, a loss of $13.6 million. That's quite a hit. Jumping to the balance sheet, as of December 31, 2024, they had about $60 million in assets, but $82 million in liabilities. This means they owe much more than they own. Looking at cash flow, it gets more interesting. AirNet actually had positive cash flow from operations of about $22.7 million. The positive cash flow is due to cash coming in from discontinued operations. One of their latest strategies involves dipping back into the wild world of cryptocurrency mining, focusing on Bitcoin. They recently purchased thousands of Bitcoin miners. The success of AirNet's in-flight media network rides on whether advertisers and passengers actually care about their ads. If people aren't watching or advertisers don't find it effective, AirNet's revenue takes a nosedive. AirNet is betting big on in-flight business. If this doesn't take off, their financial results and growth could hit major turbulence. Economic downturns in China or globally could really hurt AirNet as people cut back on travel and advertising. A significant risk is that the Chinese government might decide that AirNet's business structure isn't kosher, putting the company in a tough spot. Some of AirNet's directors and officers also own parts of their VIEs, the entities in China that perform much of the work which can create conflicts of interest. They rely on contracts with these VIEs, but those aren't as reliable as owning the companies outright. Adding to that, the Chinese government could decide to regulate overseas offerings or foreign investment, which would limit AirNet's ability to get funding. There's also the risk of getting delisted from the Nasdaq if US regulators can't fully inspect AirNet's accounting firm. Trading of the company's securities could be prohibited if the SEC determines that AirNet's audit work is performed by auditors that the PCAOB is unable to inspect. They also face currency exchange restrictions which could limit their ability to get money in and out of China. A significant portion of revenues has been derived from a limited number of airline companies in China, and this dependence may reoccur in the future, which would make them more vulnerable to the loss of major advertisers or delays in payments from these advertisers. AirNet's management admits that their internal controls over financial reporting weren't effective as of the end of 2024, which is not good. They've said our business depends on demand for our advertising services from our customers, which could be affected by the level of business activity and economic condition of our customers. The failure to comply with governmental regulations and other legal obligations concerning data protection and cybersecurity may materially and adversely affect their business as they routinely collect, store, and use data during the conduct of their business. The filing procedure with the CSRC shall be fulfilled, and the approval of other PRC government authorities may be required in connection with our future offshore offering under PRC law. So, what's the story here? AirNet is a company in transition, making some risky bets to try and reignite growth. The cryptocurrency venture is particularly interesting, but also adds a layer of uncertainty. On the plus side, management seems aware of their internal control issues and are working to fix them. However, the company needs to turn things around and prove that its new direction can generate sustainable profits, or at the very least the company can get access to other sources of funding. If not, the risks are high. Alright, that's our breakdown of AirNet's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.